I'm going to share my screen, and I'll start right where JP left us off, which was what is my favorite currency pair to trade right now with Alexander. And so here I'm going to give it away. You can see right here, right? This is my Avoria Prime back office, and you see 2 trade alerts. And can you see those, JP? Can you see what are those 2 pairs?
The Australian dollar versus the US dollar, and the New Zealand dollar versus the US dollar.
Perfect. So that's exactly right. So right now, JP asked before we started recording, what right now are my preferred currency pairs with Alexander? And so you're seeing it. And the reason there's still alerts sitting there, you notice that that's today's date, because I'm done. This is NFP week. I've already kind of bagged what I feel is an excellent week, about 5% from Alexander. And so that's good, right? And so I'm not taking any new trades, because I know as we move into tomorrow and then especially Friday, I don't want to be exposed to the market. So I have all trades closed. I have a clean slate, and I'm happy with what my Alexander did. So let's talk about why am I trading these currency pairs? And then I'm going to show you kind of that answer is a dual part answer, but I'm going to show you how am I making my decisions. So the why is kind of connected to the how. The reason I'm trading these currency pairs is because I can get some extra insight on knowing whether or not I want to accept or decline or approve or decline a particular trade opportunity. And before I get into that, let's talk about the majors, right? We'll make this interactive. Do you guys know what the 7 majors are? They're considered the majors. Who wants to play? Any of you guys can unmute yourself. Let's see if we can put together the 7 majors. Simon probably knows them. JP probably knows them. And each of you might know some of them. Anyone? Nobody wants to play? All right. Nobody's going to play. So the 7 majors are all US dollar denominated, and I'm going to go from like I'm going to go from like one end of the spectrum to the other, from more dependent to less dependent on the US dollar. Okay. And so first would be the Aussie to the USD. Then you'd have the NZD to the USD. There's a little hint, right? And then as we progress from left to right, then you're going to have the GBP to the USD. And then you start getting into more of your, or actually probably the CAD, quite frankly. That's probably a toss-up, but I actually would list the CAD to the US dollar first, then GBP, USD. And those could, depending on what's going on in the world, those 2 could flip-flop too, quite frankly. And then you get into, those are kind of the no man's land. That's why a lot of people actually won't trade them, right? GBP USD is very volatile compared to the other 6. And the CAD USD is a little more volatile, but they're both kind of more no man's land. They're really affected by, external factors a little bit more. And then we'll get into the more the anchor currency pairs, right? So now as we keep moving across that spectrum, we get into there's 3 left, and they're the anchor currency pairs. And so you've got the Euro USD. That'd be the next one in terms of, again, kind of like stability, if you will. And that's the most heavily traded currency pair in all of Forex, by the way, the Euro USD. And then you get to the Japanese yen and the USD. And as we start moving towards this spectrum of more dollar dependent to less dollar dependent, understand that the individual currencies that the dollar is paired with are really significant, right? Tonight's a little bit of like a fundamental lesson, and then we will get into some technicals, but I want you guys to understand this because it can really factor into your trading decisions. So the Japanese yen is one of what we start to call the safe haven currencies. The US dollar is one for sure globally. The US dollar is kind of like one of the most prominent, what you'd consider to be safe haven currencies. When there's more uncertainty in the world, you'll find that global investors want to have money in the US dollar. We're the largest economy in the world. And so that's a big part of typically why that happens. But as we think of a currency pair, it's really important for everybody to remember that that means there's two individual currencies that always make up a currency pair. And so a lot of times we can get kind of lulled into what I would almost label as like maybe a not great habit of only thinking of a currency pair as the pair and not the individual currencies themselves and their own unique factors that become relevant to that currency pair, right? Obviously, the news folders on Forex Factory is a really excellent point of reference and a great way to kind of keep ourselves reminded that it's not just the currency pair. You have a country and an economy that has its own currency, regardless of which other currency it's paired with, right? And so the Japanese yen is the second most, I guess, stable, if you will, currency pair, largely because of economic policy in Japan, right? That the way they do monetary policy is, generally speaking, less reactive, slower to move, more constant, if you will. And so that makes that currency pair kind of one of those more stable, safe haven pairs on the spectrum. And then last but not least is the US dollar to the Swiss franc. And it's really rare that you're going to see a lot of crazy volatility that is coming from the Swiss economy, because they hardly have one, right? Like, you know, think about it like this. Let's go to the JPO like this, right? When you think of like Hollywood and movies, what is the allure that you always like see represented in financial aspects of the storyline in Hollywood? Swiss bank accounts, right? And there's truth to that. A lot of wealthy people have a lot of money in Swiss bank accounts. But what does that tell you? It tells you that independently their currency doesn't fluctuate a lot because they don't have a huge economy. And so their economy is almost like, I mean, I don't know a whole lot about their economy. I think their economy is like to be a safe haven for wealthy people, right? Like, and skiing. But as it relates to this whole Forex idea, so the US dollar to the Swiss franc has, you know, really all of its kind of point of references to the US dollar, but their economy is not some huge, you know, kind of economy. But because they are almost thought of like an anchor currency, they're at the opposite end of the spectrum as the Aussie dollar and the NZD USD. And then another really great resource, if you guys, let me see, it should come up here. There it is right there. If you guys haven't spent much time looking at this kind of information, I've been talking to Stephen Vetterl. Actually, we talked for quite a while today. And a few of the other people that are kind of pretty tapped into the software side of Avoria Prime and trying to help communities of people understand just this Forex environment. And this is really useful information, right? We call this the ADR, average daily range. It's a measure of volatility. And so it's kind of telling you how many, really this should say pips. This is not points. This actually is pips, by the way. I don't know. Sometimes they label things abroad a little differently, but just know these are pips. 58.1, 461.93. That'd be 48 pips, okay, or 486.3 points in the market. But this is in basically in pips, okay. And so you have about 48 pips is your daily range for the Euro USD. So we can go and look at like the USD CHF 46, right? Aussie USD 43. Why is that? Because it's a relatively small economy, right? And then the NZD USD 47, relatively small economy, right? CAD, a little bit more going on because they're so tied to oil, and oil is a global commodity. I'm not going to do like a full-blown economics lesson or Forex lesson tonight. I'm just kind of giving you guys a little bit of point of reference on the majors. And then, of course, look at, right, here's that crazy volatility we talked about with the pound to the US dollar. That's insane, you know. That's man, nearly, you know, like 2.5x of of the, you know, like the Aussie US dollar is almost 3 times less volatile than the GBP USD. Because Great Britain's a pretty big economy, right? And so this is a currency pair that I don't know what the volatility used to look like before there was a euro. I bet it was less. But anyway, so this is a great point of reference when you just want to understand the potential for again volatility, price action, movement in the market, and how far swings are averaging. And that's relevant to every software, by the way. Like I said, I was in a very in-depth conversation today with Steve, and we were just talking about, you know, on a broader scale, how do we help guide this community of retail software users with some fundamental points of reference so that they're not, you know, choosing currency pairs like numbers on the roulette wheel. Because I swear it kind of seems like that's what people do. They look at a currency pair and they think it has a certain ring to it, or they like the way the letters look or something, and then they pick that currency pair and they're not utilizing any of the data and correlating that to the algorithmic strategy of a piece of software. So now that we've gone through all that, let's get back to, okay, so why am I trading the NZD USD and the AUD USD? Very, very simple. Those are both really, really small economies. And so as the US dollar goes, so go these two currency pairs, meaning they're going to be led around by, and you've heard Steve Vetterl talk about this before. These pairs for sure, and depending on what else is going on in the world, other pairs you could say the same thing. But for sure, these two pairs are led around by the US dollar. What do I mean by that? Well, I mean, if the dollar's going strong, then you're going to probably see these pairs going down because you see they both lead with the opposite currency of the dollar, right? It's AUD USD, which means it's leading with the Aussie. So therefore, if the dollar's strong, that means the Aussie currency is going down, dollar's going up, right? And so if the dollar's weak, then you get the opposite effect. And so let's look at this in a little bit different representation, right? So this is kind of the secret weapon here for why am I trading these currency pairs, and this is why. Because lately the U.S. dollar has been in some pretty dramatic trends. You know, if we this is an hourly chart, but let's get back to daily. And again, Steve has been showing this more and more lately as well, because like I said, we're trying to find some continuity to help the community of retail users understand what's, you know, what's going on in the world that gives a point of reference to your software. So you can look without any real expert level technical analysis. Gee, what direction has the U.S. dollar index been heading? You can see here, right? We were in a pretty significant downtrend. Why? Well, like Steve's been talking about, right? Because when you keep printing more and more money as part of COVID relief, you devalue a currency. And so the U.S. government, in trying to kind of fend off an economic collapse, has been doling out COVID relief, which is necessitating them to basically print money. And so the more you create oversupply, the more you reduce value, right? Again, I'm trying not to go like full blown Eddie economics on everybody, but I want you guys to understand this stuff, you know, because you'll make more sense of your software experience. Do you need to know this? No, that's the beauty of Avoria Prime and the tools that they provide to retail traders. You don't need to know this, and you can still have a pretty favorable experience using their products. But if we can help you to gain a little bit of grasp on some of this stuff, you can make more educated decisions with what you're doing with your software, what you're expecting from your software, and so forth, right? And so this was a great time to be in these currency pairs right here and only be taking buy positions, right? Which is what I did for the last couple of weeks. I was only trading these currency pairs. And in here, now this is a daily chart, so this is going back way more than a couple weeks, but great time to be buying, right? I mean, you can see the correlation to COVID, look, crazy, right? You can see that at first, look at this, in March. I mean, it's so fun when you can make sense of what is going on, right? At first, we had this spring up in the U.S. dollar index, right? And this was kind of before the real knee jerk of wow, this COVID thing's a pretty big deal set in, and the dollar was just on a terror. And then as kind of the dynamics of how pervasive COVID was becoming conclusive to policymakers, you can see that we started getting into this dynamic of issuing federal support, impacting monetary policy, printing money, devaluing the US dollar. And by the way, the DXY is something you guys can follow lots of places. You can follow it on investing.com. You can get a TradingView subscription. And so all I've been doing lately to accept trades is I usually keep this on an hourly, because that's where I have my software set up as well on both the Aussie dollar and the NZD USD. And then I simply want to get a feel for where are we going right now. And then that'll tell me whether or not to approve or decline a trade. So here, right, where the US dollar is going down, this is all buy trades on the AUD USD and NZD USD. All buy trades all day long, right? I will not accept a sell trade in here. Why? Because why would I want to sell the currency, the dependent currency? I don't want to sell the Aussie or the NZD when if the dollar is going down, it's like a teeter-totter, right? If the dollar is going down, then those other currencies are going up, right? Watch. Call that an inverse correlation. Look at that. Here's that exact same time frame, just like I promised you, right? This is the NZD to the USD. See, right there, it's going up. We know that because the DXY is going down. They are directly an inverse correlation, right? We can also look at let's get to the Aussie. There you go. Same thing, right? Same thing, right? Aussie dollar going up because US dollar index is going down, right? Absolute opposite correlation. And you'll find that the overwhelming majority of the time. So that's why I'm trading those currency pairs, because I want to put the odds in my favor of not dealing with heavy drawdown and having an understanding of why I'm accepting the trades I'm accepting. And so those are two currency pairs, you guys, that regardless of what software you're using, unless there's something really unique going on in the world, like really unique, it would take something very, 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 very significant in the individual sovereign nation of Australia or New Zealand for that individual currency to be the influencer in that currency pair. It's almost always going to be the US dollar that's the influencer. And so if you can gain a really clear insight to what the US dollar is doing, well, then you have kind of like an extra insight, right? You kind of have I call it like a video game cheat, right? You have an extra insight as to where there's an extremely high probability that currency pair is going to be going in a certain direction. And then, you can do a few other things as well. So here's the other thing that I do. You can see that I do have a really, really key support resistance level in here, because as I'm looking at this currency pair, if we were getting close to this 93, which I talked about this, man, on one of Alan's Wedgie Wednesdays like a month and a half ago, probably, and I said, man, and I chimed into another thread too where people were talking about, I think, gold trades, and I said, guys, be careful, watch the DXY and watch the 93 level, and that'll show you an inflection point. And I called this. We can go back to the thread just so you guys don't think I'm like blowing hot air. It's in that TradeWise trader thread, and I told you that if the DXY establishes a foothold above 93, you're going to start to see gold sell off. What has happened? Gold has sold off big time. Again, this stuff is not rocket science, right? I enjoyed trading gold a lot in here, and I did a lot of gold trading, and I enjoyed it because it was not difficult to have an understanding which way to trade that, because gold also, at least in this dynamic, and in most cases, right, gold's also going to be susceptible to what the dollar is doing. And so the other piece to this is having this point of reference of where is a really, really major support resistance level. So you can see this is an hourly chart. All of these touches across 93. A lot of resistance here. Price couldn't get above it. Finally got above it. We got support. Broke down, but got right back above it. Broke down again, and then a lot of confluence in here, right, where it's chopping around this 93, trying to figure out where it wants to be. Had a hard time getting back above it here, so it started acting as resistance. A lot of candle touches in here, and then it finally broke out. And we haven't seen the likes of 93 in quite some time. And so I watch this because as we start to get into the range of the 93 level on the dollar index, that will also impact my decisions here. I would stop taking trades on either side because I know we're at what you call an inflection point, right? If this thing started getting down here and we get into confluence, I want to wait and let the market tell me which direction to trade. I don't want to guess at it. That's not nearly as enjoyable to me, right? I'd rather trade in an educated fashion, not in a guessing game fashion. And so, not that you're always going to get it right. You're not, for sure. I don't. I get it wrong plenty of times. But when we can glean some insights from other fundamental market components that'll tell us what's going on, well, we can use that in our trading. And so for now, I'm a buyer still, right, on both NZD and AUD. And like I said, if this wasn't NFP week, these trades would have already been accepted because these are both the direction I want to go, right? Just like I said, right, the software picks up on trends as well. And so that's the other cool thing is the trend direction is relevant in your Alexander software. There's a moving average input. You guys have probably noticed that on your software settings. There's a moving average input. And so it actually does care about, what direction is the currency pair headed. It uses that. I don't know all the secret sauce behind Alexander and Einstein, but I do know for a fact it's using moving average as an ability to help establish trade direction. And you guys can see that there's an input for it right here, right? Right, let's see, moving average period, where are you? Right here, right, 20. So it's set at 20. I don't ever mess with that, but again, that's a clue that the direction of the 20 period moving average, now this will be on an hourly because my charts are set to hourly, right? And so that becomes a relevant factor. So let's go look at this. So you can see if we get back to either of those currency pairs, right? Here's the NZD. And let me just throw a average. Potential weighted moving average. All right. So let me see what our settings are. Let's get it to 20. That's where it is on the software on Alexander. All right. So 20. So really, really easy, right? Pretty easy. We talked about I'm a buyer. Why? Because the software, and so here's this, that's why the software's throwing buy trades. In here, it threw some sell trades, and I actually took those. Why? Because when I looked at the DXY, I saw that we had a nice little uptrend starting to form. I wasn't sure how long it was going to last, but I did take some buy trends in here because I saw the evidence that we might have bottomed. We had some really good confluence, curve started to change, and we started to trade above, let's see, this 20 period moving average, right, on the DXY. And so I was taking sell trades in here where we're selling the NZD, selling the AUD. And then as we started to plateau again, this is where some basic charting skills will always, always, always serve you guys really, really well, even when you're using software, right? This is not hard to detect. I'm going to put it back right here. Can you guys see? Somebody unmute. Tell me if you can see where my crosshairs are right now. I'm going to show you another really, really significant fundamental lesson.
Yes, I can see them.
Okay, awesome. So before we're ever getting to here where I need to make a decision, do I keep taking sell trades, or are we going to get back on a buy trend with those two currencies? Meaning, is the US dollar going to keep going up, or is it going to get back on its downward trend? here's how I was able to make that decision. I go backwards, I look left, and look at all of this support right here. This was support, right? And then it becomes, support becomes resistance, resistance becomes support. So back in, before it was happening in real time, this was support. Price bounced, got above it, bounced, got above it, bounced, finally broke down, tried to come back above again. See this candle here? Tried to get above it, couldn't. Got a what you call a pin bar, right? A wick that pushed through that couldn't hold. Tried to get another pin bar here, couldn't do it, didn't pierce. And so we stayed underneath of it. So as we started getting into here, and we're getting pin bars and it's getting rejected, I'm no longer now taking those sell trades, because it tells me that that little mini retracement on the US dollar is running out of steam. It's running out of push. Because look at this, 1, 2, 3, 4, 5 hourly candles that could not get a candle close above that price threshold, right? And so I waited, I stopped taking trades in here of any kind, and I waited. And then look, the market showed me again where it's gonna go. It started pushing back down, which means you're back on that buy position if you're NZD USD or AUD USD. And if this wasn't NFP, like I said, I'd be all over these trades right here. But because it's NFP week, I'm good, right? Penny saved is a penny earned. I don't want to flirt with where the market might go next, because I think this particular NFP report is a big one. We're in like a hyper volatile time right now to begin with, and so I don't want to go there. But that's pretty much, that probably overwhelmed some of you guys, and some of you are like, oh, this is awesome. But we'll just stop here and I'll take questions. I mean, I'll spend as much time with you guys as you would like, but fire away on your questions if you guys have any. Hopefully this made sense. Did this make sense at all? Was this a little bit helpful? I hope.
Kinda.
Kind of helpful, or you kind of have questions?
Kind of helpful. And
Okay.
I have a lot more questions than I started with.
Okay. Well, fire away, Kenny. I'll answer if you ask.
Well, I'm thinking about it. I don't know what to ask yet.
Okay. That's all right. Anyone else? I'll tell you what I love. It comes up all the time, right? YouTube University. So you can gain an understanding for how to handle support resistance, either lines or zones. Maddie likes to use zones, and I'm not at all opposed to that, right? So you can use 2 lines and make it a zone, and you can see, look at all of this behavior in between those 2 brackets. You can always go back in time and find where significant price levels are on any instrument. And when you do that, it helps you make real-time decisions, because these zones always tend to be relevant, and you can establish them from what happened before you got to where you are right now. You never want to make decisions in real time without using a prior point of reference, meaning something that happened previously in time, right? We can come back by moving left, and if we went far enough left, I bet you we can get back into that. Oh, look, here's another area we can get back into this zone again. Not for very long. We almost tried to get back above it here. Kind of a little bit of a zone, and then, man, this was all like pre-COVID. This is going, well, summertime, right? Back into June. We're up really high here, 97. I think the dollar index was over 100 at one point. Crazy pre-COVID. Pre-COVID, U.S. economy on a tear. I better just stop there. I might start talking politics. Make no mistake about it, folks. You can come to the charts and see for yourself. The economy does better under a Trump administration. I'm just talking facts. Anyway, we won't go there. But you can come to a chart and you can let the chart tell you the truth of that matter. Anyway, so you can always find points of reference historically and utilize those in your current decision making on what do I do right here. Nobody else has any questions? Was this like entirely extremely confusing? I really want to know. My feelings won't be hurt. I want to be able to deliver value, and if it's confusing, then we're missing value. So that means I need to tailor how we're sharing this type of content if that's the case. Anyone? Anyone? Barrett?
I mean, I can be honest, Ryan. I understand. I'm trying to even figure out how do you even pick the pairs. I did understand that the USD surrounds most of the major pairs, but there's so many different pairs. You have the exotics, you have the cross pairs. I don't, aside from what you're explaining down on the candles and the charting.
Yeah. So, and that's a great question, Kenny. And I'll tell you something that I think should be really relevant. Now, with software like Variable that cost averages, or Alexander, although I, really like to focus going forward much more on Variable for obvious obvious reasons.
Really big obvious reasons.
that everybody's seen on the MyFX books. But software that cost averages is less susceptible to spread. But to answer your question, Kenny, there's two things that you should be looking at if you were trying to go out on your own, which I know you're not, and people are either going to love or hate this. I talked to another big leader inside of the Legacy Launchpad community today, and I told him, dude, look, here's the deal. When we get into phase 2, if someone deviates from the settings that we're able to furnish because of track record, then they're out on their own. They can do what they want, and that's great. But if somebody goes off the range and they deviate from this, then I'm just going to simply tell them, I'm probably not the right person to help you, because I can't help you solve a problem I didn't help you create. This is insane right here. So why would anybody feel like they've got to reinvent the wheel when we get into Variable? Then they're just not going to get my help, and probably Alan and probably the other leaders in this community that understand trading and software. Not that we're trying to be egomaniacs or anything like that, but why we're trying to build a community that has a lot of continuity. Why in the world is this result not good enough for anybody? This is insane. This is 4.5 months.
Ryan, the result is tremendous, and that's not even that. That is, how do you say? That's why you have an expert advisor, right? That's why you should have an expert advisor.
Yes.
There's no other reason to go above and beyond that. Now, the reason for this class is so that you kind of understand the material that you're discussing, because not only will it be good for you to be able to talk to somebody that kind of knows how to trade on their own, but also somebody that wants to know a little bit about what trading is, other than just selling. Because I mean, everybody's here to, at least specifically on this class, we're here to learn about how to trade, right? The other factors we know, and I'm waiting on Variable. I've been waiting on Variable. I'm tired of waiting on Variable.
Yes.
And other things to come, obviously.
Yep. No, I'm with you. So let me finish answering your question. So look, the two things you want to look at are volume and spread, right? High spreads mean you're paying more points, more money to the broker to trade a particular currency pair. So we always want low spreads. While the trading strategy that gets utilized, with we'll just keep the conversation to Variable, is not high. It's not like, so you guys have all heard of Haley, so we'll just talk about Haley. Is going to be much more spread sensitive because it's a scalper. A cost averaging software is going to be less spread sensitive, but why give away money if you don't need to? So you have spread, and then you have volume. And you probably don't want to get caught with any expert advisor software trading, or let me be more clear, arbitrarily trading currency pairs that don't have massive volume. Why did I use the word arbitrarily? Well, if a software is designed specifically to a particular currency pair like Stratamus, which we're about to have. That software was built from the ground up, literally to trade the euro against the Singapore dollar. That's an exotic currency pair. But every currency pair has behavioral tendencies. And the creator of that software was able to identify certain aspects of the behavioral tendencies of that specific currency pair, the euro to the Singapore dollar. And he built an incredible algorithmic trading strategy around that currency pair. And so with Stradamus, that's the pair. I can't wait to have our hands on Stradamus for that reason, because it's simple. How complicated can it really be when you have a piece of software that was built entirely for one currency pair, and it's got I don't remember how long, a really, really long-term track record, because that, again, it's not like the Singapore dollar has all kinds of massive liquidity, massive volume, and therefore massive volatility. It doesn't. And so, in fact, I think it's one of the lowest volatility currencies in the world. And that's part of why that software was built the way it was, because it's anchored off of the fact that the Singapore dollar doesn't actually have a whole lot of volatility. And so, that element of the selection process notwithstanding, you want to choose currency pairs with some specific intent, right? So I've been talking to a lot of the other, community, different people in Avori Prime that have big communities, and they're like, dude, how are you getting these results? Like, a lot of the guys have been reaching out to me going, how in the world what did you do? And so I'm explaining to them, well, it's pretty simple, guys. The first thing I did is I understand that lower volatility is usually going to be a good thing for algorithmic trading software. And then volume's also going to be a good thing. So I started with the Euro USD. Why? Because it has reasonable levels of, pretty low volatility, and it's got the highest volume. And then I counterbalance that with another currency pair that, again, is even a little bit less volatile, the USD CHF. You guys can see that here. It's a 46.1 versus a 48.6. And so it's even less volatile, really low spread, and it progresses further in the direction of safe haven in case the economy gets more volatile. And so I just felt like these two currency pairs had a lot of valid explanation for why you choose them. Their daily range is close in proximity. And the one with the highest volume, by the way, more volume helps reduce volatility to some degree, because it would take a lot more dollar bills to move that currency pair because it is so liquid, right? And then the US dollar to the Swiss franc, knowing that the Swiss franc is kind of the ultimate safe haven currency. And so that's why I chose that profile that I chose. And I chose a setup that accommodated these behavioral fundamentals of these currencies, or these currency pairs. And so I didn't just arbitrarily close my eyes, walk outside to my dartboard and start throwing darts, right? I utilized data available and an understanding of the data and a little bit about the software. I sat in on a webinar that helped me understand a basic idea of the software. And so we went into this with an educated guess, let's call it, but more educated than guess, for sure. And that's why we chose the setup that we've chosen. And I think to some degree, that's why we've seen wonderful performance from this profile. So for whatever that was worth.
Thanks so much for the explanation, Ryan.
Yeah, you're welcome, my friend. And that's the other benefit of a community, right? Like you said it, you don't have to guess at those things. You call your buddy Ryan, right? You call your buddy Simon, you call Alan, you can call some of us who have had considerable trading experience. Matty Ice is another one. And that's why we do these. JP actually, who's on today, has had quite a bit of trading experience, but we don't ever want people just taking arbitrary guesses at things that they don't need to guess at. Just like we said before, right? Like, if anybody's going to go rogue on setting up their variable, then I'm just going to pray for them and wish them the best, but I'm not the right person for them to ask for help, because it wouldn't make sense to me why they would guess at something when they can use an educated, substantiated point of reference from an actual 5-month track record that gives you data to work with instead of guessing, right? So
Yeah. And the point of an EA is to be able to make your life easier. The
That's
guesswork
right.
is actually done for you, you know?
That's right. With respect to the individual trades and managing trades and so forth, you're absolutely right. Yep, that is true. Well, I appreciate you speaking up, Kenny, and asking your questions. Before we wrap this up, does anybody else have any questions? I'd love to answer them while I'm here. Not often that I'm make an appearance on the Wednesday trading sessions. Not that I don't love it, because I do, but I love that our, many hands make light work. Our community has other people who are also super passionate and equipped to talk trading, which is cool. Super, super cool. All right. Well, good, you guys. I appreciate you tuning in. This was recorded. I'll get the recording made available to you within the next couple of days. And I would encourage everybody to rewatch it, like especially Kenny, because you had some really good questions. This is like anything else in life, right? To learn something requires repetitions. And so I would really encourage you for sure, circle back and rewatch the video more than once. Watch it a second, third, fourth time. That's how I learned to trade. Lots of repetitions of educational content, and then lots of repetitions of executing trades on demo accounts. And then unfortunately, more repetitions than I'd like to admit, losing real money. That's how you learn. The repetitions obviously always matter. So you guys can come back and rewatch the video, but I do think for those of you that are going to continue to use Alexander, there is some really useful insights that we covered tonight. So I would encourage you to come back and circle around and watch the replay a couple of times and get it out to your teams if they want to continue to utilize Alexander, because this will help them have a more predictable decision-making process with currency pairs and either accepting or declining trades on Alexander. All right, you guys, blessings. Have a great night. Appreciate each of you. I'm always here to help. So if you have any specific questions, I'm one phone call away. See you guys. Have a good night.